stamp duty you pay on the value of the property at its current price, or what we originally bought it at?
No, it's the value right
Today.
now, or the consideration.
No, okay, thank
Okay.
you.
But if there are no mortgages and you gift the properties, okay, gift as in don't charge any money for it, then there's no stamp duty land tax. Okay. But if you've got mortgages, and you gift a property, then the value of the mortgage or the amount of the mortgage is the deemed consideration. Because the other party, whoever there might be, will remortgage usually to that amount. So that's seen as the consideration. So you pay stamp duty land tax on that figure.
Yeah.
Yeah. For your purposes, Trevor, when that person incorporates, the guy that you made up earlier on, okay, let's say he's got a significant portfolio of 7, 8 or more properties, when he incorporates, okay, and moves the properties into a limited company, what happens is the base cost, so for our purposes, we call it the purchase price. He bought those properties for 100 grand each, okay, today they're worth 300 grand each, so he's going to have to pay tax on the 200 grand gain per property. He doesn't like paying tax, does he? Well, in fact, he doesn't mind paying tax, but he doesn't want to pay that much tax. So if he can move into a limited company, his new base cost, or for your purposes, let's call it purchase price, becomes 300 grand. Now, let's say a year later, he sells one of those properties for 350 grand. Remember, he paid 100 grand from, okay? So 350 grand. His gain isn't 350 minus the 100 grand, which is 250. His gain is 350 minus the 300 grand, which is the figure on the day he incorporated. That's going to help him reduce his capital gains tax. So that's the idea? So go back to your friend and tell him that's how it works. And he's going to thank you forever.